There's a $6,000 tax deduction sitting inside the IRS system right now, fully available, completely legal, waiting for every American senior age 60 or older, and the overwhelming majority of people who qualify will never see a single dollar of it. Not because they did not earn it, not because they do not qualify, but because nobody told them it existed and the deadline to act is June 30th. Before I go one sentence further, I need to clear up the single biggest reason most seniors click away from a video like this and lose thousands of dollars in the process. Some people hear IRS deduction and immediately assume it only applies to seniors with complicated investment portfolios or large taxable incomes. Others assume it is only useful if you are struggling financially. Both of those assumptions are completely wrong. This deduction applies to you whether your only income is a Social Security check or you have a pension, a retirement account, rental income, and savings in the bank. The IRS does not means test this. If you're 60 or older and you qualify based on the criteria I'm about to walk you through, the deduction is yours to claim. Here is the uncomfortable reality. The IRS built this deduction into the tax code, but they do not send reminders. The money sits there unclaimed unless you know to ask for it. Your tax preparer does not automatically flag it unless they are specifically trained on senior tax situations. The software you file with may or may not surface it depending on how you answer the setup questions, which means for millions of qualifying seniors right now, this deduction goes unclaimed every single year. Every dollar you do not claim is a dollar that stays in the system. It rewards the people who know where to look. It quietly moves past the people who do not. This video is for educational purposes only and is not personalized tax or legal advice. Tax laws change and individual situations vary significantly. Always consult a licensed CPA or enrolled agent before taking action on your specific tax situation. What I am going to walk you through today is verified directly from IRS.gov and Social Security Administration sources. I will give you the exact numbers, the exact thresholds, and exactly where to verify every single piece of this yourself before you do anything. And before I get into the specifics, I want you to picture something. At the end of this video, I'm going to walk you through a real scenario where a retired couple in Ohio used this exact deduction and recovered more than $6,200 in a single tax year that they had been leaving on the table for 3 consecutive years. They were not doing anything wrong. They just did not know to look. Stay with me through the end because the final piece I share is the most important, and it is the one almost nobody acts on before the deadline. Here is what this deduction actually is and why it is worth $6,000 or more to qualifying seniors. The IRS provides the enhanced standard deduction for seniors age 65 and older. But even if you are between 60 and 64, the medical expense deduction layer applies to you too. And combined, both layers are what create the $6,000 figure. In many cases, it is significantly higher, depending on your specific situation. Here is why this matters so much right now. Most seniors have no idea that Medicare Part B premiums, Medicare Part D premiums, supplemental insurance costs, and qualifying out-of-pocket medical expenses can be stacked together and deducted once they cross a specific threshold relative to your adjusted gross income. For seniors, that threshold is lower than it is for working-age filers, which means expenses you have been paying every single month, premiums and copays and prescription costs, may already push you past the deduction trigger without you realizing it. You have been spending the money, the deduction has been sitting there unclaimed. Let me give you a concrete example. Patricia is 67 years old, widowed, living in Ohio. Her income is $29,000 per year, a combination of Social Security and a small pension from the school district where she worked for 22 years. She pays $185 per month in Medicare Part B premiums. She pays $40 per month for a Medicare supplement plan. She has a prescription she fills monthly that costs her $67 out of pocket after insurance. And twice last year, she had specialist visits that cost her $150 each after her coverage applied. When you add all of that up across a full year, Patricia has more than $4,200 in qualifying medical and premium expenses. Combined with the enhanced standard deduction she qualifies for at age 67, her total deduction package exceeds $6,000. Her taxable income drops accordingly. At her income level, that deduction saves her more than $700 in federal taxes in a single year. She had been filing a basic return every year with a local tax preparer who was using the standard form and not the senior-specific form. Nobody had ever walked through her actual expense picture to see what she qualified for. That changes the moment you know to ask the right questions. Now, here is something I want you to understand clearly because it affects every senior watching this differently. The deduction I am describing is not a tax credit. A credit reduces your tax bill dollar for dollar. A deduction reduces the income that gets taxed. Both are valuable, but they work differently. And the way this particular deduction interacts with your specific income sources, whether that is Social Security, a pension, IRA distributions, or part-time work, determines exactly how much you benefit. This is why the number is $6,000 as a baseline and often significantly more. It depends on your exact picture, which is why the most important thing you can do before June 30th is verify your specific situation with a licensed CPA or enrolled agent who specializes in senior tax returns, not a general preparer who sees your return once a year and plugs in the basics. Let me tell you what most seniors do not realize about the June 30th deadline. Many federal tax adjustments and corrections, including amended returns and certain deduction elections, have windows tied to the calendar year or to specific quarterly deadlines. June 30th represents a critical filing window for seniors who may need to file an amended return to claim deductions they missed in prior years, adjust estimated tax payments before the next quarterly deadline, or correct a withholding situation that has been costing them money every single month. Missing this window does not mean you lose everything permanently, but it does mean waiting a full additional year in some cases and leaving more money in the system for more months while you wait. The people who act before June 30th recover money faster. It is that straightforward. Here's the part of this that most people never get to because they turn off the video before it comes. The deduction I described for Patricia applies to her current year. But if Patricia was entitled to this deduction in 2023 and 2024, and her preparer did not capture it, she may be able to file amended returns for those years and recover money she already overpaid. The IRS allows amended returns going back 3 years in most situations. That means the total recoverable amount is not just $700 for this year. It could be $700 multiplied by 3 years, more than $1,200 recovered in a single corrective filing. And for seniors with higher qualifying expenses, that 3-year recovery figure climbs significantly higher. Now, here's the real scenario I promised you at the beginning. Thomas and Beverly are both 68 years old, retired, living in Columbus, Ohio. Thomas retired from a manufacturing company in 2022. Beverly had been retired since 2020. Their combined income is $51,000 per year from Social Security and Thomas's pension. Between the two of them, they pay Medicare Part B premiums for both spouses, 2 supplemental insurance policies, prescription costs, and had significant dental and vision expenses over the past 3 years that they paid entirely out of pocket because their Medicare coverage did not cover those costs. The previous tax preparer had been filing a standard 1040 every year and applying only the basic standard deduction. Nobody had ever gone through their actual out-of-pocket medical picture. When their new CPA, a licensed enrolled agent who specializes in retirement age clients, went through their records for 2022, 2023, and 2024, she found qualifying medical and premium expenses that had gone unclaimed each year. She filed amended returns for all 3 years. The total federal tax refund across those 3 amended returns came to $6,240. Not a credit, not an estimate. A direct refund of taxes they had already paid and never should have owed. 3 years of the same deduction sitting unclaimed. One conversation with the right professional changed that entirely. If you have been filing a basic return every year since you turned 60 and nobody has ever specifically walked through your Medicare premiums, your supplemental insurance costs, your prescription expenses, and your out-of-pocket medical bills as a combined deduction package, that conversation is worth having before June 30th. Not because it is guaranteed to produce a refund for you. Every situation is different. But because the cost of not having that conversation could be thousands of dollars per year, every year, for as long as you continue to file without it. Here is what I want you to do right now, today, before you close this video. Write down these 4 numbers. 1, what you paid in Medicare. Part B premiums this year. 2, what you paid for any supplemental or Medigap insurance. 3, what you paid out of pocket for prescriptions. 4, what you paid out of pocket for any doctor visits, dental care, vision care, or medical equipment not covered by your insurance. Add those 4 numbers together. If the total is more than 7.5% of your adjusted gross income, you have likely crossed the threshold that makes these expenses deductible. And if you are 65 or older, and you combine that with your enhanced standard deduction, the total deduction value may be significantly higher than you think. Then take that number to a licensed CPA or enrolled agent before June 30th and ask one specific question. Am I currently claiming everything I qualify for as a senior filer? And have I been claiming it in prior years? That one question could be worth thousands of dollars. If the answer is no, or even maybe not, that is your signal to act before the deadline. Here is the most important idea I can leave you with. The deduction exists right now. The IRS accepts the forms. The amended return process exists for exactly the situation I described. The money that Thomas and Beverly recovered had been sitting in the system for 3 years, waiting for someone to ask for it. You are 60 or older, You have paid into the system for decades. You have earned the right to claim every deduction that belongs to you. The deadline is June 30th. The forms are at IRS Gov. The professionals who know how to do this are available right now. Do one thing before you close this video. Send it to one person in your life who is 60 or older, a parent, a sibling, a neighbor who just retired, a friend who has been filing the same basic return for 20 years. Because the odds are very high that they are missing this deduction right now, and one conversation could change their financial picture significantly. Tax laws change frequently, and everything in this video reflects currently available information for the 2025 and 2026 tax years. Always verify with IRS Gov directly and consult a licensed tax professional before taking action on your specific situation. If even one piece of this was new to you today, hit the like button and leave a comment below telling me which part surprised you most. Or if you have already recovered money through an amended return or a senior deduction, tell me how much it saved you. Your experience helps the next senior who finds this video. And subscribe if you want more content specifically about the financial benefits that exist for people who have put in the work and earned the right to keep more of what is theirs.